Mr. Keki Mistry, Vice Chairman and CEO of HDFC Limited joins us. Mr. Mistry, good morning and thank you for joining us. What is your view on inflation and do you see Reserve Bank of India maintaining status quo in April? However, do you see a risk of rising interest rates over 2014?
See, my view continues to remain what it was in the early part of the year. I remember talking to your channel sometime in January and saying that, in my view, inflation numbers will trend lower. In fact, not just January, even earlier than January. I said that inflation numbers will trend lower. And in my view, RBI will not make any change in rates in the credit policy. And I still hold the view which I had in the early part of the year, that when you look at the second half of the calendar year, there is a possibility that RBI will start cutting rates. Because I think inflation numbers will get lower, number one. And number two, more importantly, RBI will also want to start pushing growth a little bit. And sentiments would improve a lot if we were to see a stable government emerge after the elections. And if that were to happen, and that was coupled with slightly lower interest rates, the improvement in sentiment would bring in a lot of investment. And that is really what we need at this point in time.
Keki, hi, morning. Your view on the economic recovery and how do you see the demand in real estate sector picking up?
See, if you look at the overall economy, the headline numbers have got better. And again, this was something which one had anticipated a while ago. The inflation numbers, number one, have got lower. We talked about that. Second, more importantly, we've seen that the current account deficit, which was so much of a concern in the middle of last year, 2013, has clearly got significantly better than before. And thirdly, we've seen that the finance minister, when he presented the interim budget, the fiscal deficit number was also kept at 4.8%, which was the earlier guidance. So from a macro perspective, numbers are getting better. If inflation gets lower, there is a possibility of rates getting lower in the second half of the year. If you have a stable government coming in, then core inflation, then if stable government comes in, RBI could start looking at lowering rates. All of that is obviously a very positive thing. Now, the real estate sector, if you look at real estate, if you sort of segregate between residential and commercial, if you look at the residential market, I don't want to talk about this quarter numbers because, you know, we are in the midst of the quarter and we are close to the end of the financial year. But if you see the period up to December of 2013, in our individual loan book, we saw a growth of 27% after adding back loans sold in the last 12 months, which is a very high growth compared to the numbers we've always been talking about or guiding the market to. So we've not really seen any slowdown in the demand for residential residential houses, and that probably emanates from the fact that the lending is more to the middle income and the lower middle income category rather than for very high value loans. Our average loan size in the current year up to December was 21,90,000 rupees with a 65% loan to value ratio. So typically you're looking at properties which are in the range of around 35 to 40 odd lakhs, which is typically middle income type housing. So that market has not really seen any kind of a slowdown. Commercial real estate, we don't deal with commercial real estate, but just my personal view on commercial property is that commercial property prices have been weak. And that is, of course, a function of the fact that the investment cycle in India has been slow now, not just for the last few months, but for the last couple of years. So if the investment cycle is not really picked up, the demand for real estate, particularly commercial real estate, is not going to be there or is not going to be high.
Any view on election outcome impact on property prices, a view on how property prices will shape up, A, if we see a third front, or B, if we see a stable government?
I very honestly don't want to get into any conjecture on which government who will form a government. That is not my business. But to be honest with you, if we were to have a stable government at the center, sentiments will get a lot better. And if sentiments get better, I don't see it having any material impact on residential properties or on residential housing, unless and until people start seeing a situation where you start seeing job losses in the system. Now, the job losses in the system can happen for a variety of reasons. But frankly, we don't really see that as a likely scenario where we will see job losses in India. And as long as there are no job losses, I would say stable property prices. Commercial activity of demand for commercial real estate can pick up if there is a stable government at the center, and that helps in kickstarting the investment cycle.
What about competition in the housing credit? That has increased. Will you be chasing volumes and market share, or will you be protecting your margins right now?
See, we have as a strategy always talked to our investors over the last many years that we've never really chased market share. Our objective is building up a good quality asset book, and that is reflected in the fact that historically over the last many years our total loan losses have been just 4 basis points. We continue to believe that despite this competition, and it's not that we are not mindful of competition, we respect competition, we are watchful of competition, but we are not unduly worried about competition taking away too much of our business. And that is reflected in the numbers that you have seen for yourself. If you take the year ended March 2013, we had a 31% growth in the individual loan book on a large base. And now in December, if you take a 12-month growth, we had a 27% growth. So these are big numbers on a big base.
Mr. Mistry, for HDFC Limited, 9 months margins have dipped by about 10 bips and Q1, Q2 about 4%. What is your view on margins and spreads over next few quarters?
We are too close to a financial year, so let's not talk about specific numbers on what margins would look like and stuff like that. We've always talked of spreads, and we said our spreads will be within a band, which we've talked about several times, and we continue to believe that spreads will remain in that band.
Right. Your asset quality stress has also increased slightly in the last few quarters. How do you see asset quality shaping up going forward?
I don't want to make forward-looking statements. We are talking going back. If you look at if you take the quarter ended December 2013, our total gross non-performing loan numbers stood at 77 basis points, fully provided for. In other words, the net non-performing loan number is 0. Now, the non-individual segment, the percentage of non-performing loans was 1.18%. In the individual segment, the non-performing loan number stood at 0.57%, if memory serves me right. So I don't expect any untoward or any significant change in the percentage of non-performing loans.
Contribution from subsidiaries has increased in recent times. What is your view on contribution of profits from other subsidiaries going forward?
See, we've always said for a long time that the share of profits of our subsidiaries as a percentage of the consolidated profits of HDFC will continue growing higher over a period of time, largely because these subsidiaries come from a lower base, and because of the lower base, the percentage growth in profits would be higher. You see that reflected even in the December numbers, where the share of profits of the subsidiaries now account for 33% of the consolidated profits compared to 28% in the previous year.
And what's your view on lending rates going forward? Do you see any scope of increase in lending rates or any home loan schemes that may be announced in the coming quarters?
There are no plans to change any lending rates. Lending rates would remain where they are. Obviously, if interest rates in the system were to come down in the second half of the year, as is my expectation, I would believe the rates would also come down.